this. Where's the order flow, right? It could be just right here, and then that could be your refinement. If it's not this way, right? If it's not this, the next way is to refine order blocks in 30 timeframes by choosing the extreme refinement if it does follow order flow. So you're going to refine choosing order flow, or just choose the extreme of your order block that mitigates something to the left. And that's your second way. The third way to refine it is you're going to choose a decisional refinement. Let's say maybe over to the left, we have something that looks like, I don't know, maybe it looks something like this. Maybe it looks something like this. Well, we can reason that if price comes all the way down here, is this going to hold most likely? No. So if the extreme refinement is lying at liquidity, well, then that tells us that we want the decisional refinement to happen because we just want a quick wick down and then price to go all the way higher. So does that make sense? That's how you choose your decisional versus your extreme refinement for, refining your order blocks. So if you're decisional, or if your extreme lies at liquidity, enter based off the decisional. Or if your extreme lies within a big wick, choose the decisional, right? So that's how you need to go about this. And then lastly is identifying which of the Asia setups is probable, right? So we have that inducement right here, and we have our valid order block. And let's say this is Asia session right here. What Asia model does this look like? If someone had typed in the chat, what Asia model would this be that verifies this as a correct order block? Which one of these? Someone want to type in the chat. Boom, B, right? So now we have our Asia model, beautiful. Where's the inducement? It's Asia low. We then expect this, take off, right? Boom, high quality, high probability trade setup. That's what you do on the intraday timeframes. Pretty straightforward. And this is the routine approach you always want to do, how you approach every single breakdown. After this, now that you've identified the main order blocks, its refinements, and the lower time frame inducements that will cause price to get here, right? Inducements cause price to get here. Now you want to, well, the last thing that's left to do is wait for timing to align and wait for price to mitigate your OB. Example, this could be 3 a.m. and the order block could be mitigated. The last question that we need to ask yourself is, how are we going to enter? Right? We have everything. How are we going to enter? This is where you need to always have the same methodical entry protocol. What entry models are you going to use? Are you always going to wait for BOS? Or are you going to do this? I'm going to be providing you guys with an example of the highest probability entry models of what you're going to be utilizing. Okay. So this is going to be your entry checklist. All right. So once the OB is mitigated on your higher time frame perspective, and we're going to draw this out so we have some example. Let's say this is your higher time frame order block. Okay. This is how we are always going to approach it and how I approach it. All right, this is your higher time frame order block right here. And let's say this is where price currently is. We know that we have some form of inducement, and this validates or verifies this is the correct order block, and it comes into a low. Well, how many people in here, or how many of you are struggling with entries? You don't know how to enter, or you conceptually know, but you are always either getting in late, or you're not in the trade at all, or a much larger stop loss. How many occasions has that happened to you? Right? That's probably one of the most common things. Your analysis could be great, but the hard thing then is, well, how do I get in? How big should my stop loss be? What should the RR be? Should it be a 110, 115 above? Let's talk about it. So the first entry that I always and will always take, right, is a refined limit order. Now, the purpose of this entry, and all these models with the high probability, the purpose of this entry is it's the first entry, always the first entry. By having a refined limit order, this ensures that you're going to be getting in the trade. So it doesn't matter if you have decisional or extreme order block. What I always do is, if this is my higher time frame OB, and let's say this is right here, let's say this is the higher time frame order block, my first entry that I will always take will be either on the higher time frame if the first TP is a 1 to 5 or above. It must be that. Meaning if I take a 2-hour order block, it must be a 1 to 5 or above, because RR is everything. It must be a 1 to 5. If it is not, what I will do is I will choose my refinement, and my refinement I'm going to make, and I'm going to set a limit order. My refinement must be a 1 to 7 or above for my first TP. And by choosing a refinement, this ensures that you're going to be getting in the trade after the inducement, because we know that all these stop losses of buyers and the sell stops of sellers, they're going to be liquidated, and we expect prices to run away. So if you're oftentimes waiting for BOS, majority of the time will not happen, because in order for price to form, a wick in a candle, what needs to happen is price is just going to keep going higher until it just takes off, right? So that's why BOS is, by the time you identify, oftentimes will be too late. So the first entry you take, it won't necessarily be the highest RR. And this is where you need to take, the ego or the greed aside and not think, oh, it needs to be 1 to 10, 115 above. By trading smart, having a plan, you're able to put things into perspective, rather than saying, oh, if it's a 1 to 5, I might only make $150 or $200, whatever it might be. Instead of thinking about that, whereas I could have made 500 plus. Think about it as, you're entering this position not to make majority of the money. You're just entering this first position to, 1, get in the trade. So if you don't get anything else, at least you make some money. But second, and most importantly, is after you're in the trade, right, where you're going to make most of your money is going to be from your second or your third entry. This is where your risk reward must be a 1 to 8 or above, and your stop loss will be substantially smaller. So when you're in profit here, let's say you are maybe $100 in profit, you're like, oh, I should get more. Don't think about it like that. Think about it as, hey, I actually have, $100 of extra risk that I can be utilizing to make even more on the next position. So let's say you have your first entry, great. Maybe the next one you do a BOS entry. Let's say maybe it does this. Where's your next order block? Well, your next order block is going to be right here, following order flow. So again, you can ask yourself, all right, I want to maybe take off some here, but knowing that price can come back down here, you might take off 50, 60, $100, whatever it might be. And then as soon as price comes back down to here, what you're actually utilizing is that first position that you entered and you already took out some profit. You're going to be utilizing the profit that you just made to risk more on your second entry. So maybe you would have just risked $50 initially on your entry. But if you just took $50 out for your first day profit, you're not just going to be risking $50 on your next entry. You're actually going to be risking $100, because you're accounting for the profit you've already made, and you're allowing yourself to lose what you initially were going to plan, which is going to take you back down to break even for the day. So you're going to be risking, in theory, double of what you normally would, but you're not going to be losing any more than you initially planned, right? So then by doing that, while you might have only been up $100 to $300 here, now by having this much larger R, maybe it's 1 to 10. You're not just going to be making 1 to 10. You're going to be making a 1 to 10 times double the risk. So now say $100 is at risk rather than 50, and you're holding it to 1 to 10. You might make $1,000 compared to the mere 200 you were just up before. It's levels. So you got to think about it smart. Everything's purposeful. The first entry is not to make $1,000. The first entry is to get a small win or take off something off the plate, so then you can risk even more the next trade, because your trade idea is still valid, but you want to make that much more money. But to make more money, you have to think smart about when doing it. right? So that's the first, this is how I always enter my first positions, right? Second position, this is not second, third, fourth. These are all equal, right? So your second position, third position, they'll always be one of these. So this is how you're going to handle your second, right? Your BOS. And this is going to be either based off of a decisional or an extreme. If you have a BOS that looks like this, well, you always are going to have your decisional, you're going to have your extreme. How do you know which one is going to be valid? It comes down to inducement, right? So if you have your order block right here, and let's say you have something that looks like this, where do you think the correct order block is, everybody, the decisional or the extreme? Good, good. The decisional. Why is the decisional valid? Because it has inducement before it that's telling us it's going to go higher. Inducement tells us the valid order block. So we have here, awesome. Let's say that we just have this in this moment in time. Which is the valid order block, the decisional or the extreme? Beautiful. You guys are already got it, right? Then the extreme is going to work in this case. So just always be cognizant of that, right? Now, we have the BOS entry. What is a continuation entry? Again, how many times have you guys tried to get into a trade, but you might actually not be able to get in per se, or just runs away without you? This is where continuation trades come to play. And these are the easiest, I say some of the easiest positions. You're not going to get in at the absolute other move, but you're going to be, these trades are oftentimes going to be the highest RR or your order flow, right? So what I mean by this, if you have your higher time frame order block right here, and let's say that you have some form of inducement here, right? And then price does this. Well, now, if this is where price mitigates, where are the first two areas, if you guys can mark on the chart, where the first two areas price needs to go? Where's the, after mitigating here, where's the inducements? Beautiful, right? Yes, Cecilia, yes, right? Because we know that this can happen, or we know that this can happen, right? One or the other. So now we have our inducements. The next thing you can ask yourself, thinking in 4D like a mastermind, if this is all efficient, everybody, and this is something again, repetition is king. If this is all efficient over here, there's no imbalance. What does that tell us over here, right? That tells us there is a wall. And if there is a wall here with no imbalance, right, and it's all efficient price action, what does that tell us price is going to be doing? Tells us that price is going to be going all the way through, right? It doesn't have a reason to stop. Exactly, Simon, right? It doesn't have a reason to stop. So if it doesn't have a reason to stop, well, then you know that the most likely scenario is price is just going to be going all the way up without stopping. If you know that, then you know that your entry is going to be a continuation. That's when you know, right? So if you know all this is efficient, price is going to go all the way higher. What you're going to do on the 1 to 5 minute time frame is you're just going to be waiting, right? Let's say this is where price currently is. Well, how are you going to approach it? If you know this is where the first target is going to be and it's going to rapidly get there, you want to focus just on the most current range. And you're always going to see some more decisional. You're going to see some form of extreme, right? And we know this could also be an inducement, but if all this is efficient, guess what? We know that if it comes down here, it'll most likely just fail. So then this tells us here, well, where's the order block, decisional, and then it can keep just going higher. So continuation entries are just the internal 1 to 5 minute structural ranges that are going to be respected when you have a wall to the left, because that tells us, well, anything that's reacting over here is just an SMT. It won't work just for a short pullback to mitigate some form of extreme decisional for then price to go to the moon. So these are the continuation entries. My personal favorite for scale-ins, SMT back to that internal structure. That's a continuation entry. And finally, last but not least, is going to be the order flow entries. This is based off the consecutive mitigations. So rather than having what we're just looking at over here, how this would differ is if we have this, right? If we have, oh, maybe a BOS, we can enter here, right? Extreme. Oh, we have another BOS. Can enter based off of an extreme. Oh, we have another one. Now where's your new structure? Don't say, oh, this is order flow, because this will not work in the future. Where's do we next want to focus on? Oh, well, here's our new range, right? So where's the order block here? Where's the order flow start again? Here's our new extreme, right? And then it'll do this. So this is order flow. Without a doubt, some of my favorite entries, very confident in, and works out great. So this is what it's going to look like. And oftentimes, again, if we don't see, let's imagine that we don't have this blue over here to the left. Oftentimes, if you wait for a BOS, and let's say price is coming into your order block and it's mitigated, by the time you wait for this BOS, you'll notice that price will just keep running away. So what we need to do, and expecting this to happen, is just follow the order flow, because price is going to be accumulating in order to target this. And if you notice, this looks like one of the diagrams or the algo diagrams, because what do we have? We have the trap, right? The inducement, and we have the stack, the order flow. Order flow is phenomenal. One of my favorite entries. That's if I encourage anyone to do anything, only trade order flow. Your win rate is going to be exceptionally high. Your confidence is going to be through the roof, and you know that works all the time, every single day, for virtually most moves. Right. So that's how, these are the 4 entry models that I would utilize. So is everyone following me so far with what I'm saying? Is everyone following? Is anyone confused? Are we all good with all of this? Make sure I'm clear as possible. All right, perfect. Perfect. So this is going to be your routine approach. Again, as you can see, very extensive, but it all has to make sense. This is your whole top-down analysis setup approach, right? Your entry criteria, checklist, everything, right? And you can upload files that are going to show you pictures. I would encourage you guys to do so. Awesome. So now we have finished the second section of the routine approach, or the top-down analysis. This is how I approach every single chart markup all the time. And if you notice, yeah, we took us a long time to go through it, but it's only, like 10 steps, or it's not a lot once you go through it routinely, right? So awesome. Now that we have section 2 complete, the last section when it comes to the routine approach of the analysis is the entry models. So the entry models are what we just discussed, and what I'm going to leave up to you guys to do is I have filled out the buys and the sells. You want to do diagrams for each. I would do a diagram or a picture so you know exactly how you're going to enter. So under your buys, if you want to do a refined entry model, for example, what I would do is you're going to click under here and you're going to upload an image, a diagram, whatnot, of what your extreme refinement looks like for a refined limit order. So what this is going to look like is if you have your order block right here, your higher time frame, what you're going to do is you're going to take a picture of not of this, but you're going to focus on here. What does your extreme order block look like within for a buy scenario? And that's how you're going to take a picture for your extreme refinement. If you're going to make a decisional refinement, you're going to do the same thing. You're still going to have your higher time frame order block, but a decisional refinement is going to be right, typically somewhere right here. You want to make a note of why you would choose the decisional over extreme, and it's mentioned right here as we just went over, right? Choosing a decisional over an extreme refinement, how do you know which one? If the extreme's lying on liquidity, choose a decisional. If the extreme is following some form of order flow, choose the extreme. Pretty straightforward. So you want to take pictures of all these diagrams, right? Do your due diligence. Everything else is filled out for you, but you got to do what you're comfortable with, what entry models you like, and don't utilize all of them. Only choose a couple, right? So then your BOS, right? Your refined orders, take 2 pictures for that. Your BOS entry, what is the decisional and what does the extreme look like? You have your, right? If this is your, let's say this is your BOS, right? You have your decisional, you have your extreme. how do you know which is going to work? If price comes down to the decisional with no inducement, we know it's just going to be the extreme. We know that the decisional is going to work when it does something like this because we have an inducement before and then it will go higher. That's how you know. So take pictures. I mean, you guys can rewatch this recording if you're struggling with the diagrams and just draw out what I'm doing now. Continuation entries, right? Same deal. After the order block is mitigated, you have your trading range. You might have something in here for your decisional. Your decisional, you have your extreme. How do you know which one's valid? Well, inducement is going to tell us, right? So do these for buys and sells. And by having a picture to refer to, you know exactly how you're going to be entering each and every trade. Very, very, very important. All right. So do that for buys and sells. You should have about 1, 2, 3, 4, 5, 6, 7, 8. You should have 8 pictures per each. Again, the more time you spend on it, the more that you emphasize the importance of this, and you always visit this on a daily basis. Like that, you should save this. It should be one of your favorite tabs, and you should just have it up every single day and just remind yourself what the purpose and reason for everything is. Okay. So this is your entry models, and I'm going to let you guys do your due diligence to fill this out in its entirety because you're going to notice that this is going to start to change everything. Okay. Now, these 2 sections are now finally completed. The entry models, the routine approach. Now we're going to go back and revisit the goals, the vision board, and the personal information. Okay. This is now, again, as mentioned, while these 2 are very important, that are going to tell us how we're going to be trading consistently, what's actually going to enforce or reiterate, the whole purpose of trading is going to come back to the first section, the vision, the goals, and your personal information. And this is what we're going to be utilizing to create our risk and our trade management plans. Okay. So now the risk overview. When you have access to some resources, you are going to be gaining access to the risk personality. As I mentioned, we have those who are risk conservative, we have those who are risk aggressive. If you're a risk conservative individual and you do not like taking a lot of risk and you like risking 1% or less, you're not going to thrive risking a lot. Just because you risk more does not mean you will make more. If that is not aligned with your psychological makeup, who you are as a human being, if you like doing risky things or if you like just staying inside the box, to each their own, both are completely okay. But one personality will not thrive by doing what another personality should. If you're risking 1%, you will not thrive risking 5 or 6%. You will fail. If you're risk aggressive and you're risking 1%, you will fail. You will not thrive because in order for you to thrive in the environment that you're made to thrive in, you need to risk more. Okay. Something no one talks about. I am a more risk aggressive individual. I like risk because I'm confident in myself. I don't want to do, I want to risk, 0.5%, 2%. I'm confident in myself. I don't need to have 20 trades to make one winning trade. I know I only need, if not one on the first trade, the second trade. So I'm going to risk more because I have that confidence. I have that experience. So I like to put my money where, my mouth is, right? So I'm more risk aggressive. After you figure out what your personality is, you then need to determine if you're going to be taking trades based off of percentages or money. Now, something I encourage majority of people to do is if I would imagine majority of people are trading with, $1,000 or less, if anything, in their trading account. I would only advise, I technically can't because I don't have any licenses, but what I would do is I would only trade percentage based once if you are funded or if you have, I would say $20,000, $30,000 plus in your personal account. That's the only time I would do percentage based. Because if you hear someone say, especially in stocks, right, like, I'm up 10, 15, 20% on the year, that could be a phenomenal year. But if you only have a $100 account, you're only making $20. So percentage based doesn't make too much, it doesn't make too much sense. You want to focus on the money, right? So when you have a couple $100 account, you don't want to say I want to risk 1%, 2%. No, I would say if you have a couple $100, I would risk based off of money. Because while someone might say 10% is over risking, but if you have let's say $200 and you're going to risk $20 on a trade, $20 is going to make or break you. I mean, at the end of the day, could it accomplish something? Absolutely, but it's not going to be the end all be all for $20. So I would say risk based off of money. So when you have a couple $100 account and you're risking based off of money and say, I want to risk $20 a trade, $30 a trade, whatever it might be, well, then you can ask yourself, all right, I know what I want to risk. What's the reward? If you're going to risk $20 a trade and at minimum you need to see a 1 to 5 before taking any partials, great, you can make $100 while risking $20 or 110, 200, risking 20. Okay. So that's what you need to figure out is how much you're going to risk per trade. If it's going to be percentage based, if it's going to be 1%, if you have a funded account, 0.5%, or if it's going to be money based and you have your personal account. Now after this, similar to FTMO, you always need to have a maximum daily loss. As I emphasize, anyone can press buy or sell on the charts. Anyone can. And I'm sure that at some point in your trading career, you've realized that you've pressed buy or sell times that you shouldn't. You've taken positions that you know that you never should have, right? It takes so much more discipline, experience, patience to not get into a trade than it does to get into a trade. Anyone can just press buy or sell. And that's the majority of the reason people fail. By being resilient, by knowing that it's going to come to you, by understanding that, there's a time and place to be in trades, and by not just pressing the button alone, that will save you so much. So maximum daily loss. Again, guys, these are just plug and play numbers. Your maximum daily loss, maybe it's $100, maybe it's $300, whatever it might be. Your maximum daily loss should generally be, I would really say, 50% of what your daily expenses are. Okay. So this is if you're dealing with a lower account, but you're going to realize as you gain more experience, I'll touch on that in a little bit. I don't want to throw people off, but what you should risk on a daily basis, let's say you need to make $3,000 a month for all of your bills. Well, if you do 3,000, right, times 12, 36,000 divided by 52, whatever that is, that tells you how much you need to make per week. So if we do 3,000 times 12 divided by 52, I just do 3,123 times divided by 52. So you need to make $692 on a weekly basis. $692 divided by 5, hypothetically, right? 692 divided by 5, 5, 7, maybe 150, 130, 150 on a daily basis. Okay, so if you have to make $130 or $150 on a daily basis, and you have to make $700 a week to, meet what you need, give or take, right? I would only encourage you guys on a maximum weekly basis or maximum daily basis to lose no more than what you need to make, no more if equal to. So if you need to make 150, don't allow yourself more than $150 loss on the day. Don't, right? As far as your weekly loss, right? Your weekly loss should be no more than what you need to make on a weekly basis, right? I mean, it shouldn't be any more than that. So if you have to make $700, you should not lose more than $700 in a week. As for the whole monthly approach, right? Your monthly risk limit or your monthly benchmark is you should not even come close to what you need to lose or what you need to make on a monthly basis when it comes to loss. So if you have to make $3,000 a month, I would shut it off at 50% of that. At $1,500, if you lose that, you're cut it out for the month, right? Because there's just not something that's aligning. But if you can follow the plan, you'll notice you're not going to reach your weekly, let alone your monthly loss limits. If you can follow it, if you don't follow the plan, you're in debt much sooner than you think. Excuse me. All right. So understanding what your daily benchmark is, that's what you must make on a daily basis to live the lifestyle that you want to live. So this was per week. If I do that divided by 5, let's just say it's 1,500, it's 387, like we talked about on a daily basis. So the DEX is so important because this is what we utilize for our first take profit, as you're going to come to realize in the next section. So if you only have to make this on a daily basis, anything else is extra, right? So what you need to do is by having a benchmark of what you must make, you then need to have goals. This is what's going to put things in perspective. After you make what you need, you might have a goal. So again, this is not the scale. If you only need to make $150 a day, maybe a phenomenal day for you is going to be maybe make $250 on a day. Or maybe the high end, it could be $350 on a day. And what you're going to realize is your goals, once you are consistent, your goals are just going to become your benchmarks because you're going to have new goals. And then your future goals are going to become your benchmarks because you're going to have more goals, right? But so this is going to help you stay on a routine, methodical approach, right? So this is how you always need to approach it, taking out what you must have. And then anything above and beyond puts into perspective where it's like, damn, if I blew it out of the park, hey, I'm done for the day. I am proud of myself. I did what I need. Could I have made more? Sure, but be appreciative of what you make. Thank yourself, thank the market, thank like I'm grateful for today's profits, and walk away. When you express gratitude, that allows yourself to accept more things in the future because you're all aligned. You're ready to take on the next challenge. But if you're going to be greedy and you want more and more and more, you'll notice you're going to get humbled because it's not the right time and you are not in the right state of mind to be receiving all that you want. Once you have what it takes to make all that money, then you're going to be aligned with everything and it's going to find its way to you. So be appreciative, express gratitude, and by having these benchmarks, these daily goals, and these medium and high end, that's going to tell you then when to walk away, when to walk away when you've had a bad day, when you walk away when you've had a great, phenomenal day. If you walk away for a bad day, it's because you met your loss, right? Do not risk anymore. Just walk away. It's okay. It doesn't mean you're a failure. Just wasn't your day. If you meet what you make, if you meet a goal for your day, wow, you did awesome. Walk away. Okay. Then weekly, it's the same thing. You want to have what your weekly risk limit is. Like we just talked about, your weekly benchmark. This is what you must. This is your monthly. Again, your weekly is 173. This is 173. If you can make what you need on a weekly basis for 4 weeks, you're already on the path to becoming a full-time trader. And once you can do that consistently, you can then transition to trading because you have confidence. You know what it takes, and you have a plan to get there. But you have to do due diligence to fill this out and figure out what makes sense. I said 15, 30 minutes. This could take a lot longer. The more work you put into it, this will change everything for your whole perspective as you know it. Right. And then your weekly goals, the medium and the high end. Sure, this might seem crazy to some people. To some others, some of you guys might already be doing this. Awesome. Right. There's just levels to this. And the only thing that's changing is an extra couple zeros. Everything else is remaining the exact same. All of it is. Right. So that's how you need to approach your risk overview. Determine what your personality is, if you're going to risk based off of money or percentages, and then what you're going to be risking per trade. And for those who want to fill this out and then who want to share their plans, I would be more than happy to take a look. If you have any questions about your trade management or your risk management, your approach, anything, I'm more than happy to help. And I would encourage you guys for Wednesday session for the study room, bring it and we can review them. That'd be awesome. All right. So this is your risk overview. The last and most important, I say everything's most important, but the trade management is the toughest part of trading. Great. Once you can get into the trades, once you can analyze properly, once you can successfully get into trades, that's just the first demon, I guess, right? And the analysis before entering, that's the first thing, having analysis, knowing the concepts. The second thing is then knowing how to actually apply it properly. The third thing, and the most difficult, that is going to be the barrier between staying where you are and becoming successful where you want to be, is going to be trade management. Knowing when to walk away, like we talked about, good, bad day, knowing how to manage your trades, how much to take off for partials, knowing the exact RR you need. If you're at 1 to 5 and you know it could reverse, but you also know it could keep going if you go to 1 to 10. What do? Do you just hold to get to the 1 to the 10 and it could be worth it? Do you just completely take off? And that's what you have to determine, right? So this is where trade management comes into play. All right. So last section, trade management. Okay. When to break even. So what I do when I break even is after, there's no exact pip amount, but I would say after 10 or so pips, if price is really starting to move away, that's when I would move to my break even point, or after the first BOS or continuation or inducement. So if you are looking for, if you're in a trade, right? Let's say that we are in sells. Let's say you have an extreme over here, and let's say that you are in sells right here. Where's your break even? Your break even point is going to be right below here, right? It must be a 1 to 3, 1 to 4 or above, 10 pips or above, whatever that number comes to. And after you break even, you need to know where your partials are going to be. So I always have 3 TPs, always. I have an intraday, a swing 1, and a swing 2. How do you set TPs? TPs, there are 2 ways to take profit, based off of RR or based off of structure/inducement liquidity. Only 2 ways, right? RR or some form of liquidity. How do you actually take profit though? For example, if we look at, let's say sells again, we look at sells over here and we have this. We have, let's say, so where are your TPs in this instance? TPs, if you are entering a sell here for what, let's say this is the correct sell and we are following some form of order flow. Your first TP, right, depending on the RR, it should be a 125 or at a minimum or above, or it should be at your first structural or inducement point. Whichever one comes first, that is worth the money. That's what you need to determine. So if you're risking, let's say $50 right here, right? Let's say you're risking $50, and in order to meet your goal, you have to make, let's say 150 on a daily basis, right? Let's say you have to make 150 to meet your goal. If you risk $50 here, and let's say right here, you are at a 124, you are already past what you need to make on a daily basis. So what I would say is rather than waiting here, I would go ahead and take some off, because the difference between here and here, it could be, this could be 200, and this could be 200, this could be 400. So how do you manage it? What I would do is obviously you're gonna have your break even point. This is where you're gonna be breaking even. At this point, this is where you could get $200. Put the money into perspective. Don't say, I want to be 1 to 20, 1 to 30 RR. Screw RR at this point. Once you make what you need, keep that thing. Do not risk it. Keep it. So what I would do is I would take off, a third of the position. If you take off a third of your position here, that's going to leave you with what, $70 or so. You're almost halfway to where you need to be. Awesome. Take off half of your position or your DEX. This is your DEX, your daily expenses. Take off 50 or 60% of what you need to make. Once you meet that, you take it off. Now you're going to realize, well, damn, after at my first TP, I already meet what I must make for the day. Take it off. Awesome. Take off the rest of what you need. So maybe at this point, you're up another $200. What I would do at this point, if you're up 200, you've already closed 70, you're up 270 for the day, and you only need to make 150. I would go ahead and take off the remaining $80 to make it 50. So then now that you've taken off $80, right? Now you've made what you need for the day to 150, and then just let the rest run. So TP1 is your DEX. You want to take off everything of what you need for the day, or 60%, 50 to 60% what you need. So your TP1 is your first inducement. Your TP2 is going to be your second inducement, or if you have the confidence, is going to be engineered liquidity, right? So this will be your second TP. Because why? We know that this could be a type 3 inducement for price to go higher. That's why we TP at inducements. We also know that we can just liquidate this low and then price can go higher, right? It's going to do extreme refinement because we've all seen this happen at some point. So that's why we have our TP1 or TP2. This could be your TP3, but then price to sell all the way lower. So always have your TPs and know how to manage the trade. And you can go and read through all of this, close a full TP from intraday and swing perspective, trailing stop. You can decide to have one or not. All that is moving your stop loss right above structural points as prices continue to go lower to ensure you're at least going to take some profit. For me, I do not have a trailing stop. I'm confident in my analysis and I know what my thresholds are. And but if you are struggling, I would definitely encourage that. All right, then we have the entries, right, per trade. So 2 to 3 entries per trade idea is what I would recommend. Meaning if this whole point of interest and these targets, this is all one trade idea, right? This is all one trade idea. So what I would encourage is have at least one, but no more than 3 entries per trade idea. And let's say you get stopped out. Maybe this is where you enter and then you get stopped out. Do not sweat. Don't say, oh, it's invalid. Oh my God. No, it could just be another inducement to come up to the extreme and then go lower. So what I do, as I mentioned, is I break even after price runs a certain period of time or it hits, a counter BOS or inducement. However, if I know that, if we're in this OB over here and this is where my first entry is, and let's say this is where your break even is, I know following order flow that where's the next valid order block? It could be right here. And let's say this is what price is doing. I'm not just going to take a break even here because I know that this can be a valid entry. So in this case, after I move to break even, what I'll do is if I see an inducement, I know that this can happen. So it would be dumb for me to break even on my first position, not enter that second scale in, and then just miss out on the entire move because I wasn't trusting the analysis. So trusting yourself, trusting the analysis is huge, and that's going to determine how you're going to break even. And I would only break even if you don't think this is a valid reentry. If it is, I would just keep your stop loss where it was, because if it fails, well, guess what? It's just going to keep going the opposite direction. All right. So ran after stop loss. Yes. If it still follows your main idea, I would definitely enter after your stop loss because it can just be a double inducement. So move on to the next trade idea. As far as trade ideas, I would only ever have 2. Realistically 2 per session. If I'm looking for sells for London, I only should really see 1 trade idea, if not 2 for sells. And I'm only going to be focusing on those. And if I lose them, well, then I'm done for the day. Okay, come back tomorrow. And being able to walk away is the toughest thing when it comes to trading. Walking away is, especially when you're dealing with FOMO, revenge trading. Everything that they want you to feel, you got to be able to battle yourself and see it for what it is. Again, when to walk away after a good day. After you meet your decks, right, your daily expenses, you can walk away. It's been an awesome day. Or once you've met your medium or high goal, walk away. Don't even take another trade. Don't be greedy and think, oh, I can make more, I can make more. The reason you have those medium and high goals in place is a solid number where it's like, hey, you've met this, walk the F away. Do not risk anything. Don't be stupid. Don't be thinking, oh, I met my goal for the day. Now I want to risk everything. Or, if you made 500 million, 150, don't think, oh, yes, now I need to risk, $350 so I make so much more. You're just going to lose the 350. History repeats itself. And that's what you're ultimately attracting is greed. And greed is going to be your downfall. All right. Want to walk away for a bad day, losing 50% or all of your daily expenses or half of the weekly. This is when you should walk away. Then your withdrawal plan, as mentioned, I would always have a regular interval. I would either do daily, bi-weekly, or on Fridays. I would encourage you guys to withdraw your profits initially. I would encourage you guys to initially withdraw profits on a daily basis, not to your account, not your personal money, but to a separate account. Do an internal transfer from your main account to an internal savings account, the internal trading savings account, and save it there. And then every Friday, as you're just taking that money away, then pay yourself the actual money on a weekly basis. That is going to ensure you're not going to be risking what you need to make. And I can't tell you enough. Please learn from this. Just don't keep your money what you need in your trading account. Do not keep it. Do not keep it. Because it could just take one time for you to screw up all of the hard work you've done. By completely eliminating that, or to completely eliminate that, all you need to do is just transfer it. Think it doesn't exist. Take it. Think it doesn't exist. And if you're struggling with that, ask someone. Ask me, because I know at first I was like, well, I can just keep all the money. I'm just gonna keep compounding and compounding. For me, that worked awesome until I lost F and everything. And I can tell you, you do not want that. You do not want to work thousands of hours to make something just to lose it all. So paying yourself, putting the money into perspective is the only way to have some form of tangible understanding of what money actually is. Because I became desensitized to it. Seeing tens of thousands of dollars on a screen and you're not processing it, that's where things start to get scary. And those were my biggest challenges for the past few years, is not being enough for what I used to make. And now being able to put it into perspective. If you have a couple $100 in front of you, cash compared to numbers on a screen, you're gonna have so much more like, damn, this is $200. I could do something with my husband. I could do something with my wife. I could do, something for my family. Don't just say, oh, it's $200. I want more. It's bigger than you. It's for the purpose of trading. And it's not all about the money. It's about the time. So by doing these things consistently over time, this is what's going to allow you to have and become a successful trader with a very profitable plan, a whole comprehensive outline that you most likely have never put together all of this before, because it's something that you have to learn. You can't just, unless you go through all the experiences yourself for years and years and years, you won't be able to make something like this because it takes experience, or you have to learn from someone who has. So with that being said, everybody, this is the whole entire comprehensive trading plan. The link has been sent in the chat, so make a copy of it. It's also going to be on the website right after the call. So make a copy of it, a duplicate, and just work on it. Prepare yourself for this week. Write out your goals. Write out what you need, and make affirmations daily. And you're going to notice your paradigm shift, your plan, your level of confidence, knowing everything that you need to know. You're going to watch the pieces start to come into place or fall into place exactly as they should, and notice that randomness doesn't exist. And because you're ready to accept the money that's coming towards you, that's what's going to allow you to receive it by having everything. So I've been talking my tail off for quite some time now, but this is the whole trading plan, everybody. And very, very in depth. And I would encourage you guys to fill it out before this week starts. And yeah, so with that being said, does anyone have any? Let me check the chat. Does anyone have any questions? I'm gonna watch it until here. Control here. All right, see you, Craig. All right, yeah, all right, everyone. So go ahead. I'm gonna allow you guys to reduce a quick Q&A. Let's see. How participants unmute themselves. Okay, so let me go over here. Share. All right, so first thing done, second thing done. Now what I want to do is I want to do a quick Q&A with you guys to partially give me a few minutes. And of course, as usual, we're going over, but not a problem. I'm here for y'all. So what I want to do is I want to open the floor for any questions that you guys might have in regards to what we just went over. So unmute yourselves, type in the chat box, and hey, the floor is yours. Whoever wants to go. And we'll take about 5 minutes or so, and then we're going to do a quick forecast, and we're going to be done by, let's say, 4 p.m., so 15 minutes.
Griffin, is this a live page we'll be able to load our information into, or we copy and hit elsewhere?
No, yep. So it's completely live. So as mentioned, if you just oops, let me see if I can I got to copy the link again. But yeah, no, it's for you. So this is when you click the link, it's going to take you to Notion, and that's the the journal that we were just on. You're just going to make a duplicate of it. Well, if you don't have a Notion account, you're just going to create a free Notion account, exactly as you said. Create a free Notion account. Once you create that account, you're then going to have this template that I just sent. You're going to make a copy, and then you can edit everything as it's your own. So yes, it's going to be exactly what you just saw, the same format, everything.
Okay.
I just want to say what's up, everybody.
Going on, Mr. Price.
Going on?
Hey, peace. What's good, bro?
What's up? What's up? Man, I just want y'all to just have a good week, upcoming week. You know what I'm saying? Just have fun with it. Don't do this.
And make some money.
And make some money. Yes, sir.
And make some money.
Absolutely.
I appreciate
got
it,
a question. One more question. Outside of
Yeah,
is anybody using MT4 on a Mac?
Yes.
How are you using it? What are you doing?
Well, I have this. I just bought a new PC, so I'm using my PC on Mac. What do you mean? How are you using it? Like, do you need to download it?
I use it on my PC on my desktop with no issue, but when I tried to download it on MT4 and everything and put it onto my MacBook, I don't think it liked me. So I just trade from my desktop. But I don't necessarily want to continue to all the time.
Yeah, I would look up MT4 download for Mac OS, and then there's going to be an option for you to download it for Mac. And then I would just download it from there instantly, and it's just going to go through the whole process. Once it's done downloading, you have to drag it to the applications, double click on your on MT4, and it'll open. So yeah. So
okay.
I can send you, bro.
Yeah, I think actually what it was that risk calculator. But once I go back through this trading plan, because I like what you're talking about, percentage versus dollar amount. So I'm gonna have to really just key in on that and probably go to a dollar amount versus percentage.
Absolutely, and the risk calculator app, that is it took me a while to figure out how to get it on Mac. So if you're shooting that, just message me and I'll work with you.
Okay.
Yeah, how long before you upload this video? I missed about half of the meeting.
As soon as we're done, I got to upload it to the security, and then after it's done rendering, I'm putting it on the website. So I would say within the next 2.5 hours after it's done.
Okay, perfect. Thank you. Appreciate it.
That's like 5:30, 6 p.m.
Okay, perfect.
All right, who else has some questions?
I appreciate it, Griff. I'm about to head on up.
Absolutely, bro. Yes.
I'm gonna try to take trades while I'm at work.
Well, be careful with that, man. It's difficult. I know how it can be when you're at work and you want to watch and manage trades and you're not able to. So if you do, just make sure that your parameters are in place and just let it play out and just trust yourself.
Yeah, I'm gonna be probably taking more so like intraday swing plays and just kind of just like I said, stick to the plan and just I'm gonna probably do limit orders and win or lose is whatever. It's just gonna be what it is.
If you just set limit orders at extremes, you're gonna be good. You're gonna be more than fine, bro. You're gonna be great.
Yeah. All right, y'all have a good day. I'm gonna holler at y'all. Might try to do a call or something if anybody down with that. So.
I'm sure people will be.
Yes, sir.
Definitely, bro. Let me know. All right, probably, what today is? Today's Sunday, so
market close tomorrow.
Yeah. So maybe later on tonight if y'all down. That's whatever.
So, all right.
I'm available today.
Awesome. All right, bro.
All right, y'all. Catch y'all later.
See you. Right. Let's see what questions do we have. Yes, I use Risk Calc app. So for instance, I am supposed to get my funded account through MFF. At like 5 p.m. I got to take a 0.01. That'll be my 5th trading day. So if I can show you this, let's go to here. I'll pause this. Let's see. Go here. Trade. All right. New share. So this is. Let's see. Right. So this is the phase 2 of MFF. Passed it on. Well, it took one day to pass, which was awesome. And I'm just holding these quick 0.01s over here. Right. And this is what we had. Was this the signal? I'm trying to remember. Yeah, right. I don't know if this one was or this one was, but regardless, this was an awesome trade we had last week. 120 pips. For that signal that we called live, that was pretty awesome. But yeah, so I already met the 5% gain, and I'm currently waiting for. I think I just have like one more trading day. We can go through the maybe on Wednesday. What we can do is we can go through the analysis of the whole platform and how I approach funding the challenges. Because when you approach a funding challenge, it is completely different than a trading plan. 100%. The goal is to get funded. So you're not. Don't think about it as I need to get 1 to 5, 1 to 6, 1 to 7. Nope. If you look at all my trades, I take off what I need, where and when I need it. The goal is just to make the money that's needed, not to pass it in a day. But for instance, if you're getting in here, TP1 should be here. Why? You have a wall, order block, wall. Boom. After this, your TP, where's your next TP going to be? Well, there's no other structure below here. You're going to have to look to the left. If you look left, the only other TP is going to be this low. So that's how you have confidence holding this, right? So I still leave this in like another 100 pips or so. But regardless, yeah. So to your question, I use the risk calc app, the risk calculator, and this ensures that you make exactly what's expected, and you're not going to lose more than what you need. So for instance, what you can do is pretty cool. You can SLBE, you can close a custom amount without, it can calculate this for you. So if you want to risk 1% and you want to do a pending order, for instance, let's say you want to enter based off of this order block for whatever reason. You put your pending order right here. You place your stop loss above, which is the red. I don't know why this is not moving. Stop loss above, and then let's say this is where you want TP to be. So it's going to ensure that you're going to be, this is the amount of lots you're going to be utilizing, this is how much you're going to risk, this is your pips. It's going to tell you your RR, so it's a 1 to 11, this is how much you're going to make. And if you want to do even based off of risk reward, if this is where your entry is your stop loss, let's say you want a 1 to 5. Well, it's going to show you, oops, not there. Oh, is this even on? Well, it can enter based off of, so here you have your 1 to 5 right here, so what a 1 to 5 would look like. So you can do limits, you can do instant execution if you want to enter based off of a candle closure. Let's say the candle's closing right here. If you just place your stop loss below and you just press execute, it enters the exact lot size that you need. So this is something I would encourage everybody to do. It doesn't matter if you're doing percentage or base risk, because if you notice, it does both. Probably want to risk $3,000, let's say. Well, it tells me the risk that is, and then it also ensures I'm not going to lose more than $3,000. This is $9 a month, the best $9 you will ever spend, because at the end of the day, RR does not mean crap if you're not risking true percentages. If you're just entering 0.3, 0.4, 0.5 randomly, RR doesn't mean anything. It's just a fancy picture that you're not actually reaping the full reward or benefit from. So risk calculator app, that's something I can vouch for. I'd use it for a year and a half at this point. Best money I've ever spent, and it ensures that you're actually going to make what you need. You're not going to lose more than you should. $9 a month, yes, sir. I know there are other ones, there are paid ones. I know Craig said there's one that's like $100. This is just, I mean, easy. And you can unsubscribe anytime. You can apply it to any account. It's awesome. It's called Risk Calculator app. Awesome. All right, let's close this. All right, so does anyone have any other questions? I'm going to do just a quick GU breakdown, only a few minutes, and then we're going to call it a day. Does anyone have anything else for today that they want to ask? Because after the breakdown, we're just going to go ahead and end the call thereafter. Yeah, so as mentioned, you can expect a minimum 4 videos on a weekly basis. At the same time, 8 videos on the high end as far as breakdowns. Any breakdown that I take trade going forward is being sent. So that brings up a good question. I want to ask you guys this. Let's see. I want to get your guys' input because this is how I would like to do the breakdowns. And if you guys have a different input, I think that would be beneficial. So let me go ahead and share this. All right, share screen. All right, everybody. So this is the new breakdown. So for instance, this is going to be broken down in this manner. So this is GU trade, right? We have GU, we have the 1, 1, 2, well, this is 1 to 23. It's always start with some form of overview. We're going to have our higher time frame analysis, and you can always right click, open images, and new tab. So you can get a clearer picture of what the image looks like. So you're always going to have your higher time frame analysis, the 4-hour, your reference points showing you how exactly to approach it, right? The steps and manner to do so. You're going to have the intraday analysis, the 1-hour time frame, right? Always showing you how to further refine your analysis with more specific reference points. And then you're going to have your entry analysis showing you how specifically the position was entered. In this case, right, you had a 1 minute type 2 inducement, right? Selling above a high into the mitigation of the 14. You have a 1 minute single candle mitigation entry, and it's a little difficult to see. This is your break-even point, and then your TP was all the way right down here. So this is how the breakdown format is going to be going forward. Does anyone have any input on this?
No, but it looks good and structured though, for sure. It's good.
Awesome, everybody. Oops, shoot, just logged me out. Okay, all right, awesome. Well then, yes, you can expect these as well. As far as, let's go over here, Topic Mastery. So Topic Mastery. Right now, I'm transferring everything from ASP to the website. That's quite a task within itself. So we can get everything to be visible by everyone, from the videos to breakdowns, the analysis. That's going to be going on over the course of this week. So would you guys rather to see things updated one at a time, or once it's completely done, you guys have access if you guys want to type in the chat, because you guys can see things one at a time, but there's going to be a lot of noise, needless to say. What would you guys prefer?
Repeat that once more, Greg. You said one at a time or what?
Yeah, so I'm transferring all the Topic Mastery section from the Silver Topic Mastery. I'm transferring those to the members area of the website, so you guys can see the posts individually one at a time, or would you rather wait and have it all together and finish it concise? I just want to take a quick poll on that.
Yeah, I would definitely say one at a time for sure.
One at a time. All right, let me make a note of that. So you can start seeing some today then. One at a time. All right, awesome. Okay, then you can expect to see those today. All right, so then, yeah, we're gonna end off today. Then, if no one has any other questions, we're gonna end off today with a quick breakdown of next week's price price action. All right, so let's go through next week analysis. Let me just clear all this for the most part. How about that? Clear all this. It's been here for quite some time now. All right. So as we have now discussed with the trading plan, right? How do we approach the charts? Well, always starting from the higher time frame and above. Let's go to the 1 month, right? 1 month in this case. I would reasonably believe it is pretty. I would bet life savings that we're going to come here. I think we can all agree on that at this point. That is crazy still to believe that it's been almost 3,000 pips and should have held this out, right? Let alone this over here that we had a signal for back in January. That was amazing. Still 2,400, 2,500 pips. So how do we approach price now when it's so low? We need to have the expectation that sure, there could be a demand zone that price could react to come lower. So what you can do is you can just reference that this is an imbalance. But do we think it needs to go up almost 300 pips before going lower? I wouldn't believe so because we're so close, right? I would just think we're just going to sell all the way down. So at this moment, what I'm going to be considering or factoring in is 116. Let's get to the 1 week, right? So we already have our major inducement. This is the destination. So what we're going to do, label this as the destination. Make this here. So this is the destination. In order for us to get to the destination, we have to identify where the gas is, right, internally. So let's go down to the 1 week. And now we want to identify where's the previous weekly high and previous weekly low. Well, this is the previous weekly high that we're going to identify right here. And then this, Control V, this is going to be the previous weekly low. Previous weekly low. Now we need to know that a couple things can happen. Price can break this, come up here, go lower. You can just take out the high, go lower, or it can just keep going lower. So being said, I'm going to identify where's an order block above the weekly high. Well, I see this decisional right here that I'm going to identify now. I'm not saying this is going to be the order block that price is going to mitigate because this is still pretty far away, right? So what I'm going to do though, I don't know I have all these alerts still here. Let's identify where the gas is. So gas is above the previous weekly high. Fine, let's go down to the daily. We see a whole wall where? Right here to where though? We do have an order block that lies right here. So the only two in this instance I would consider valid is this weekly right here and this little daily. This daily order block, why? Because the previous day high, the PDH is a liquidity point, right? So maybe what we can do is we can come back up to here and then go lower, right? So I'm going to be sending alert here for a previous daily high. But let's see if there's anything else, right? So this one, it can work, but not really favored. We want to, this is really the first thing that's valid. And the next thing is maybe there's something within here. Because what price can do is it can mitigate the previous daily high or it can take it out. And if it takes it out, this is the correct order block. If it does not, then we know there's an order block somewhere within here as we've just taken out, right, this previous low. Maybe that could be the gas, then go lower. So let's see if there's something within here for the 4 hour. And what do we see? We see order flow, right? So with order flow, what do we see? We see that we had over here, we already know that there is consecutive mitigations going on. So where's the last order block? In theory, it should be right here because it's the last imbalance. So now let's see if there's something within here that would make sense. What we don't want to have happen is we aren't going to expect that price is going to come all the way up here. Why? Because it's right, it's liquidity, there's wicks. So we're not going to be looking for extreme refinement if this is our whole order block. We're most likely going to be looking for some form of decisional because the extreme lies at liquidity. So possibly something within this range, we're going to be looking for price to mitigate. So let's see if there's anything that's going on to the 2 hour. All right, we see that this is a wick, that's fine. Let's get to the 1 hour. Notice that we do have, right, as we talked about, we do have this extreme right here. Does it have to work? Absolutely not. It does not have to. So let's just see what price, what's over here. Let's go to the 30-minute or 45. Let's go to the 30, 15. What I'm trying to do is I'm trying to see if there's something within here because we do have engineered liquidity right here. We also need to know that at the same time, price can just keep going lower. Again, we don't want to chase this. We want to sell above the engineered liquidity. So let's see if there's something possibly within here. Okay, so let's go to the 10-minute. All right, so do we see anything in here? Yes, but where's the decisional? Do we see a decisional somewhere? Where is what caused price to break this low? I'm just gonna move this over here. Where was this low broken? This is where the low is broken. Where's the last order block that caused this low to be broken? Right here. So you have your extreme up here within your range, right? Whenever you have a BOS, your decisional is what causes the BOS to break. Your extreme is always gonna be the same. This is the decisional that caused it to be broken, right? Because you'll notice, well, shoot, we have this candle, we have this candle. Which one is it? I would just say it's this one. Why? Because we have engineered liquidity just beforehand. So the refinement that I'm going to be making is going to be right here. Again, this becomes more advanced. Like I talk about, these are my favorite types of decisionals, but you got to train your eyes to see them. It's not something you're going to get in a day, a week, a month. It takes time and experience knowing what works. So this is going to be our 10M decisional, and this is where I'm going to look. And why do I have confidence? Well, a few key reasons. One is we have, let's see. One is we have engineered liquidity, right? Mitigation with imbalance. The first imbalance being right here. So this is our ENG LQD. We also have, that's the first confluence. The second confluence against decisional causes to be broken. Third confluence is this line right here, if you remember, is the 4 hour order block right here. Talking about confluence, this mitigation aligns with the 10-minute decisional, right? And because we have imbalance right here, this is the candle of interest. So that's another confluence, and then we expect price to drastically sell off. So this can be the first thing that I look for, and this is what I'm going to be looking possibly for on Monday. All right, so that is going to be GU analysis for this week. And again, I'm going to be looking for a swing position to continue lower. So that being said, that is all I'm looking at. It only takes a few minutes once you become confident in the analysis, and that is it, everybody. Awesome. All right, so if we go to the 1 hour. Yeah, we'll have to see, but I like this. Let's see what price. Maybe also, yes, we do have this, but I'm gonna wait. We're gonna see. We're gonna see how price develops. Again, I have sure a lot of alerts, but not all these are valid. I gotta remove the majority of these. But again, for Sundays, Monday can just be training days. It can just sell all the way off. So I'm not even gonna look at the charts until London session or just beforehand, do my analysis. And that's all you want to do. Just identify the key points of interest, the destination, the gas, that's gonna allow price to get to the destination, and the order block above. Just those few things, and that's it. Awesome, everybody. Well, I think that's going to conclude for today's session. Thank you everyone for hopping on. If you need anything, you guys can always message me, and I look forward to seeing your guys' plans and talking to you guys on Tuesday's London session, pre-London session. All right, everyone. Have a great week ahead. Send you Luke, and talk to you guys later on.